institutional investors ready to commit to being net zero by 2050? This is the key topic of our panel today. Alignment with the Paris Agreement involves numerous decisions in order to include the topic of climate change in the portfolio right from the beginning. Decarbonization, impact investing, financing, energy transition, and new tech. Very few funds have made such a commitment in Switzerland so far, which have already begun. In France, IFRR, the French Pension Reserve Fund, has committed itself to be net zero by 2050. I'm pleased to welcome Olivier Rousseau, joining us from Paris, who is the CEO of IFRR, where he also chairs the Asset Manager Selection Committee. Hello, Olivier.
Bonjour, hello.
Bonjour, Olivier.
In Switzerland, the Zurich Insurance Company has committed itself to achieving net zero. I'm pleased to welcome Dionysios Christopoulos. Good morning.
Good morning. Thank you for having me.
Good morning,
Yes,
Dion.
good morning. Dion is the Director of Private Debt at the Zurich Insurance Group's Investment Management. For Matthias Narr, good morning, Matthias.
Good morning.
Who is with us in Zurich, is the Head of International Engagement at Ethos and a member of the Stewardship Advisory Committee of the PRA. The key question is, how can we deliver on our commitments? I'm co-hosting this first panel with Grégoire Haenni. Hello, Grégoire.
Good morning.
The Chief Investment Officer of the Pension Fund of Canton of Geneva, which he joined in June 2014. He was previously the CIO of the Pension Fund of CERN, which is the European Organization for Nuclear Research. Let me start with Olivier. Olivier, you were the pioneer in committing to net zero. Could you please describe your journey?
Yes, well, actually, we see us joining the net zero as a logical step following our earlier initiatives. Now it's becoming more and more popular, but I think in 2014, 2015, we were really in the vanguard of the climate issue being tackled by institutional investors. That's the time when we developed low carbon indexes for our investment activities. We did it in tandem with another big reserve fund from Sweden, AP4, and that was done with Amundi and MSCI. That's the time when we really started to put the climate emergency in the way we saw our investment policies going forward. So after that, it has been a number of very logical steps following in the wake of our initial action and realization of how big the problem before us was. By the way, I was listening to Jean-Marc Jancovici before, and I'm afraid I have to say I mostly agree with him. The situation is pretty grim, and it's a big ask from investors that they should solve the climate issue or all ESG matters as well, by the way. But we can bring our contribution, definitely. But I am strongly of the opinion that the major factor is regulation. I didn't answer the poll, but I would have definitely said regulation. Because investors, they can play their part, definitely. But if we have a division between the good and the bad investors, the companies being nasty climate offenders, not preparing themselves for an improvement, they will be bought by low climate-minded investors. The only consequence will be their cost of capital being a bit higher, and so their expansion prospects for their business will be less than would be the case otherwise. But it will still mean the bad investors will be enjoying a higher return on their investments if the environmental regulation framework doesn't change. We need that. And it's very quick to say the carbon tax is the crucial need that we have. But to conclude on this point, investors can prepare themselves. It's a matter of managing your risks. If you expect the public authorities will bring very massive climate-related regulations, and they are doing it progressively, then you have to prepare your portfolio. There is a signaling effect, and there is the issue of making business development more complicated for the companies that you dump because you increase their cost of debt and their cost of equity.
Thank you, Olivier. Back in Switzerland, Zurich is one of the world's largest impact investors. Dion, could you please tell us a little bit about your own experience with net zero?
Yes, so in 2013, Zurich was the first investor to issue an RFP, a request for proposal, dedicated to a green bond mandate. Back then, the green bond market had a size of around $13 billion, and we committed to invest $1 billion in green bonds. We exceeded this target. We later set it to $2 billion, and we exceeded it again. In 2019, we joined the United Nations Net Zero Asset Owner as a founding member, and then we made the commitment to become Net Zero Asset Owner by 2050. The following year, in 2020, we exceeded our original commitment of $5 billion of impact investments. Actually, currently, we hold around $6 billion of impact investments, 5 of which are climate-focused. And finally, just 2 weeks ago, in the end of March, we announced our interim emission reduction targets for 2025.
Thank you.
Olivier, how did the investment strategy moved or were adapted since you're committed?
Each time we renew a mandate, by law we award mandates, we cannot manage in-house. Each time we have to renew a mandate, that is to say every 5 to 6 years, we update our requirements on ESG and on climate issues in particular, of course. And each time we make it more demanding. This is not to say that we should have done it from the start. We are pragmatic people. We think there is little point in demanding everything at once when the market is just not able to provide it or not able to measure it. That's another crucial issue. But we see that the combination of well-intending investors, public regulations being tougher and tougher progressively, and the general public awareness make a powerful combination for asset managers to respond with better investment strategies, taking into account the climate issue better and better. That is exactly what we are doing. We are currently renewing our mandates for replication of smart beta factor investing indices. And this time, the demand for ESG and climate integration are tougher than they were 5 years ago. So it's a progressive improvement in line with the market capabilities. And in some cases, we are adding to the market capabilities. The reference I was making to the creation of the low carbon leaders indices in 2014. We are doing the same with investment grade credit. We are renewing mandates. We have upped the ante quite significantly again in this department. That's how we deal with it. But let me be very clear. We are still worried that all this is not built on perfectly reliable data, and the data availability issue is crucial. The data quality issue is crucial. The data comparability issue is crucial, and there needs to be a big pressure from the investors that we can do, but we need to have the help from the public authorities as well. And here I think the data on climate-related issues, it should be treated as a public good in itself. It should all be treated as something as important as financial data. Companies, listed companies, have to report their financials along very defined frames by the law, by the accounting regulators. The same should apply for climate issues, environmental issues more generally, and ESG issues even more generally. We cannot keep working with everybody, well-intending asset managers and index providers and ESG rating agencies, all asking companies to fill in very long questionnaires, not all of them being compatible at all. It's a nightmare for companies. We need standardization and we need compulsory disclosure of all these things.
Thank you.
Olivier, what has the impact on performance been to date?
It has been a positive to decarbonize a portfolio. Part of it is luck, let's be honest. 2014, this is the time when oil started to tank. The prices went down very significantly. And everybody going into a decarbonization strategy, would have benefited from that. And there's also clearly a hype around not having carbon in the portfolio and investing in solutions. There is a momentum. Sometimes one could say it is excessive, but clearly aligning a portfolio closer to what you would like to have for the climate has been a positive. It is not a guarantee that it will be always the case. If we do not get the decisive support from legislation and regulation towards a genuine carbon tax or emission trading schemes, that's another aspect of it, I would say. If we do not get it, then it may well be that at some point the vanguard will realize that there is no army to back it behind. And that could be a very uncomfortable situation. But so far, it has been positive. And I am confident that the public law and regulations will be forthcoming as we would expect and as we need them. But it's not sure that at all times it will be outperformance. There is a little bit of excessive optimism, in my opinion, about, do a portfolio which is full of solutions to the climate problem and dump all the rest. I'm not sure it's always going to be a winning strategy.
Thank you, Olivier. Back to you, Dion. You refer to a grid shift where the impact is no longer measured in dollars invested, but in actual impact, in intensity. Could you please explain if you feel this could be the most efficient solution to our climate problem?
Yes. So in the investment industry, usually we like to set our targets in monetary terms, for example, in dollar terms. And this is an approach we also followed at Zurich. So I did mention earlier, we committed to invest 1 billion, then 2 billion, and then 5 billion in impact investments. However, at the same time, we recognize that the monetary amount is only a means to a goal, and that instead it makes more sense to set targets on the actual impact generated by our investments. So, for example, in this case, to set targets on the CO2 equivalent avoided. In 2018, after 5 years of impact investing at Zurich, we developed a methodology together with a large asset manager to measure impact to measure the environmental benefits in our impact portfolio. This framework, including our lessons learned from this, we're making publicly available. and you can find it on our company website. After exceeding our last monetary impact target of 5 billion in 2020, and building on the expertise we developed over the last 7 years, we have decided that going forward, we will steer our impact portfolio based on impact targets only, so not monetary targets. So now the target of our impact investing strategy is to avoid 5 million tons of CO2 equivalent per year. This means we will build an impact portfolio of whatever size is necessary to help avoid those 5 million tons of CO2 equivalent per year.
Thank you.
Matthias, 2 questions for you. The first one is, how do we achieve net zero in 2050? And the second question is, how far can we decarbonize a portfolio with exclusions? In other words, what are the borders of exclusions?
Yeah, I think I'll start with the second question. I think divestment is an important tool, and I think it is something that should be used by investors. Even for stewardship, I think it's an important part, because if your engagement doesn't work, I think you should always be willing to walk away. But I do see some limitations to exclusions and divestment, especially if you go deeper into the portfolios. I think it's easy at the beginning. You kick out coal and no big impact because it's low in the index. Even on conventional oil and gas, I think that's something that can be thrown out relatively easy. But if you go deeper into your portfolio and look at chemicals, it's a highly carbon intensive industry. If you start to look at the building materials, also highly carbon intensive. If you look at traditional integrated oil companies, all of a sudden a very large part of your portfolio it has to be excluded if you want to go down that route. So I think that's not suitable at scale. So I think at that point you really have to look at stewardship as a second approach, and I think it's also what is coming from the academic, from the think tank world. If you, for example, look at the Science-Based Targets Initiative, which is, let's say, the key framework for decarbonizing companies and now also investors, they have put out a pilot how investors can achieve net zero. And one of the key approaches they put forward is what they call the portfolio decarbonization approach. And with this approach, as an investor, you actually commit to engage the companies in your portfolio. You set the threshold. So you say, okay, by 2030, 30% or 40% of my investee companies have a science-based target. By 2040, 80%, and by 2050, 100% of the companies in my portfolio have a science-based target. And this makes you, by proxy, as an investor, also net zero. So I think that's a really important consideration to push the stewardship angle to achieve net zero.
Thank you, Matthias. In your view, is decarbonizing the portfolio exactly the same as decarbonizing the real economy?
No, I think it's absolutely not the same. I think decarbonizing the portfolio is important, but it's more maybe important from a risk point of view. With decarbonizing your portfolio, you manage the climate risks in your portfolio. And I think that's important, an important goal in itself. But as has also been clear by the previous speakers, I think to really, or the end goal of this is to solve climate change and to fight climate change. I think to fight climate change, you need to decarbonize the real economy. And I think decarbonizing the real economy, what you need to do is to urge the companies to do something. So you need to urge the companies to reduce their emissions. You need to urge the companies to develop a low-carbon business model, and this costs money, and this needs buy-in from the investors, but this also needs engagement from investors. So I think the key strategy to decarbonize the real economy is to engage the companies to go down this way.
Engagement is the only concrete way to change corporates' behavior, because exclusions have little impact on the environment. Looking backwards, what is the added value of engagement, and what was the impact? And going forward, what can we expect from engagement?
Yeah, I think engagement is an important tool, But I think it also has to be done with rigor. So I think now many investors and asset owners are saying, yes, we engage. But I think it's really important to know what you're doing, I think, and really have a proper strategy. And I think what this means is you have to have clear targets, what you want to achieve with your companies. You need to monitor the progress. I think that's very important. And I think it's also important, ultimately, what do you do if it doesn't work, if the engagement is no success? So I think there you need to have a clear escalation strategy. And I think that can be divestment. It's maybe the natural solution. But I think there's other tools as well. You can go public. We have seen, for example, the Norwegian pension fund does that often when they're not happy with companies, and then they make this public. And I think this is also an engagement tool. Or you can file a shareholder resolution. I think that's a good escalation measure for engagement. So I think you need to be willing to do this as an investor. I think this escalation angle is important. And when I look back, I cannot speak for other investors. What I can see from our perspective at Ethos and the Ethos Engagement Pool International, we've had, I think, quite some successes. We have, for example, had long discussions and a long-standing engagement with RWE, the German utility, which is very much carbon intensive, has a high coal exposure, and many just excluded the company. We talked to them intensively. We visited their headquarters in Germany and really made the case for decarbonization. And I think it has worked. Just in December, the company came out with a net zero target, with the science-based target, and they will now be net zero by 2045. So I think that shows it works. In Switzerland, we have the case with Lafarge-Holcim, big building materials company. It's a very intensive carbon business model. It's not yet decarbonizable. It's not. There's no clear pathway, but they committed after a long engagement with us to set this net zero by 2050 target, have it validated by the science-based target, and they even said we will link a substantial part of the executive remuneration to these decarbonization targets. I think so to really, make it a sound strategy, and I think this is not least the output of our engagement. So I think it works, but I think investors have to look closely at what they're doing and have the required rigor. When I look forward, I think it's not going to stop this involvement of investors in climate strategies. On the contrary, we have seen a recent development in Europe, the Say on Climate mechanism, a little bit built upon the Say on Pay mechanism, where companies actually put to a vote their climate strategies. So investors get to say every year, yes, we are okay with the climate strategy of our investee company or not. But I think this also requires from the investors to have this expertise, either in-house or outsource. But I think that's important to build this capability, like for other parts of the asset management skill set. So it's not going away. And on the contrary, I think the stewardship will be even more important. And I think every investor does need to think about it and does need to develop a strong stewardship strategy. I think that's core for being a responsible investor.
Thank you, Matthias. Grégoire, you also are the vice president of the board of the Institution Investor Group for Climate Change, which is the European voice on climate change. What would be the lessons learned so far, according to you?
I think I would like to convey key messages. The first one is a climate strategy should be based on three major pillars. The first one is portfolio decarbonization and temperature reduction. The second one is impact investing. And the third pillar is engagement. I think a net zero objective should be tackled throughout the entire investment process. It starts with the definition of the asset allocation, and because I believe that exclusions won't be sufficient to meet our target. And I think the presentations this morning show that it is a real challenge. I think that portfolio management will become much more complex because we have to tackle different objectives. The first one is a risk-return objective, but now we have to consider temperature as well as carbon emissions, but it will make portfolio management much more interesting. I also believe that we should not, as Olivier Rousseau said before, we should not forget the other SDGs. I would like to congratulate our two panelists for being pioneers. I think it is key to commit to net zero in 2050. And I think a net zero commitment will create a lot of challenges, but a lot of opportunities.
Thank you, Grégoire. Thank you, everybody. Thank you for participating in this discussion.